Investors and traders, welcome to the channel. Today is 28th of September 2024. I hope everyone is having a great weekend. We will take a look at the key financial stocks and ETFs in this video for the US market. So we'll start by taking a look at the Regional Banking Index ETF. And then the XLF, which is the financials ETF, and then the bulge bracket banks and some fintech related companies. So as always, this video is for educational purposes only. It's not a financial advice. We are looking at the weekly chart of the KRE, which is the S&P Regional Banking ETF. And here for quite some time, we have this pending pattern completion around the 60 to 62 dollars per share level that we have been watching, and the market came pretty close to it. We saw a top coming around the 59.60 mark, and since then, for a number of months now, the market has actually gone into sideways price action. And then if we were to actually go back and take a look at this on the daily chart, you can see this is what the price action looks like. It's just pretty random here. It's looks like some sort of distribution taking place around here, and it was also very close to this 1.6 minute expansion of all this move that took place around here from this high to this low, which was the end of a trading range. So here, what to expect is the chances are maybe we still might be able to complete this pattern, and then what we should be looking for is actually this trend line. Whether it is able to break that trend line to the downside, then we are rotating lower. Maybe come and test this little line here around, test this support. A lot of consolidation that took place here, maybe even lower as well, so that's a possibility. Well, right now it's just very if you happen to be in this, it's quite a moment where there's in a trading range, and the trading range can last for quite some time, and it could be pretty frustrating. Now, if we take a look at the Spider Select sector for the financials, here last week we saw a basically trading range behavior as well, but this is pretty big because of the weekly candle. And then what it is doing is, you can see, ever since it put in a top around last week of August, this has just gone nowhere. So it's just been hovering around this 1.272 expansion for this much time, and we do have this ABCD, which can actually take us to about 49. But if you look at the angle of elevation, even if the angle of elevation around here was really steep, this one is less steep. Good momentum can actually take us there, but the longer we spend in this kind of formation here, trading range, I think we could have a look around here when we had seen something like this previously, because here we go. This is the March 2020, the COVID lows, really strong price action to the upside, and then just went into this kind of a wedge formation. Or you can also look at it in a channel formation. This is the kind of thing that we are doing here right now as well. So it is pretty strong to the upside. It's been a bullish pattern formation from a momentum perspective in particular, because look at this is what the 20-week moving average is, and it's above the 200-week moving average, so it's pretty strong. And whether it's able to get to this 49 level, we'll have to wait and see. Now, in my opinion, the longer it spends around here, the chances might be could actually rotate lower, and the first part will be around 43 level, which is where the 20-week moving average is. Now let's move on to some of the individual stocks. So we'll start by taking a look at the Goldman Sachs is the weekly chart, and you can see that just like XLF, Goldman has done nothing. It's just been in a trading range for quite some time, and this is the top it made end of July. It hit our exact 518 level, and it's not been able to break above it, and it's been several months now. If we just look on the left hand side, this is the kind of pattern that we had seen where distribution came in, and then we saw a pullback, and this kind of scenario can actually take place here. We could see some sort of a pullback if it just remains like here. For Goldman Sachs to move higher, it needs to break above 520 convincingly. And the longer it spends like this, the chances are it might actually come back and test the bottom of this candle, 5th of August one, and breaking below this, that just opens up lower prices. So it could just remain stuck in a trading range for quite some time, and the chances are it might be actually putting in a pretty good top as well. That chances are there because of this 1.618 expansion. Now let's take a look at the stock of JP Morgan, and you can see that JP Morgan hit our levels in this gray box here. It tried to do a breakout, but turned out to be a fake out. Because there was just no confirmation the following week and in the week after that as well. So now it's just within this trading range as well. Now one of the things is that from a symmetry perspective, here we go. If we look at, these are the pullbacks. This is the biggest pullback that we have seen in this leg. We have labeled this like a CD per our ABCD pattern formation. So this is CD leg higher. So 5th of August low, 9th of September low hit exactly that bearish symmetry. Now moving below this will actually lead us to challenge this little trend line or channel formation here, and breaking below this then could actually open up for the lower prices, and it could actually come back and test this region, the structural support, which is point B here on 173, 170 mark. So looking at this on a longer monthly chart, so here we go, because we've got the month of September coming to a close. The Monday is going to be the last day for September, and then we'll start a new quarter. We'll start the fourth quarter, the last quarter of the year. And if you look at 2024, it has just gone really, really quick, guys. Just unbelievable, but it is a fact. So there we go. It hit our levels exactly. It had completed this big ABCD going back all the way to financial crisis, when it put the low in the grand financial crisis low. And here, in my opinion, it's just gonna remain a bit of a trading range, and likely more likely to go into distribution. But we're not seeing much sign of a distribution here. The kind of signs that we saw around here. And then even here in 2019, and then we know what happened in early part of 2020 because of the pandemic. So not much sign of it, but more of a trading range behavior, and this is the kind of thing what I'm expecting between 200 225 is where it's gonna be oscillating between, in my opinion. And if it breaks above 225, of course it's a really, really strong stock, fantastically run company by Mr. Diamond. And this is what I put in. Diamond rally likely coming to an end, and the catalyst for it is, in my opinion, that Mr. Diamond has actually publicly stated that he's looking at retirement. Whether there's no time frame on it when it's going to do that, but whenever there's going to be a change of leadership, and as some superstar CEO is going to move out of that position, I think longer term investors will actually take that in their analysis perhaps. And of course the good thing is going to pick before leaving, is going to pick a team to run the company, and it's going to be his hand-picked team, so quality people. But again, the superstar is no longer going to be there. It might take some adjustment. We have seen some other companies kind of gone through this kind of transition and actually done really well out of it. Apple is a big example. After Steve Jobs, Tim Cook, and Tim Cook was actually picked by Steve Jobs himself. But we could see some sort of a pullback happen in JP Morgan. So the patterns will just be following our technical patterns. The patterns will actually tell us, and right now we have this big ABCD completing, and this is what we're watching here. Now let's take a look at the stock of this is gonna be a really interesting one. Visa. So Visa is not a bank itself, in my opinion. I don't think they have a banking license. It's more of a fintech because they do payment processing, and we were watching for this big ABCD completion right here, which it did, and it looked like it might actually go and test the $300 level, but thus far there has just been no follow through. It's just pulled back in this trading range. It broke out of it once it got above this breakout of this trend line here. Now, yeah, there is a possibility it could find some support around here. In fact, let's in terms of retracement, let's take a look at what sort of retracement it has done so far. Yep, it's right. It's 61.8% retracement, so that is some support there. And if we were to use our concept of symmetry, then what is really important is this is the biggest correction in this leg it has done, which was actually the CD leg of this pullback right here. So I'll be watching around here, that mark, um, and also in its entirety, this was the correction that took place. Here we go. So that could actually take it to here, right at this little line here, this trend line. And essentially, if it breaks below the lows of 22nd of July weekly candle, um, this will be really important because it will also be breaking below the structural support coming from this point B, going back all the way to 2021, and then I think we can look for a further bigger pullback. 245 most likely will be on the cards because that's the 30.2% retracement, but great amount of support around here. So here, just the important thing is that it's completed this big ABCD pattern, and now I think it's just gonna go in a trading range to move lower, and if it breaks above this, we've got higher targets as well. Now if we take a look at the Mastercard was actually a little bit stronger because it had actually broken out of the highs of 18th of March 2024 after completing this big ABCD and going back into this slight pullback here. So we'll use the concept of market symmetry here. Here we go. So essentially what we're looking at is basically just like Visa, if it breaks below the lows of 8th of July, and then I think we are looking at a bigger pullback which could take here. That's the 61.8% retracement, and let's see, it might actually, in that case, do a 3A2 of the entire run from the lows of 2020. So around here in this ballpark figure. Here we go, structural support. There we go. Here, it can actually pull back right into it. Oops, what's this? Okay, there we go. So this is what we are looking at in Mastercard. Now let's take a look at American Express. Here we go. Really, really fantastic looking chart, but it's also completed this big ABCD, went right into this target zone, and in fact, it has closed above it on two consecutive weekly basis. It's really, really impressive. This just shows the kind of strength that exists in here. If you look at the stock of Goldman Sachs, it's just gone sideways. This one has been actually moving higher, but they're also in a slightly different kind of business model, a lot more into the consumer debt side of things with their credit cards. Really big, American brand, American Express. Now here what it's done is on the weekly candle, it's just formed a hanging man kind of pattern formation. Now I only look at a handful of candlestick patterns, but when we get a formation like this on a weekly candle, I think we need to pay attention to it. But we don't have any confirmation, so we don't have a follow through. So we'll have to wait for next week to tell us what sort of follow through we get. But it's very close to our pattern completion, but really strong stock. There we go. And if we just take a look at this on the monthly chart, here we go, here we go, here we go. And I think I'll just have to do it on a log scale. Oops. Okay, so on a log scale, you can see that this big red ABCD completes around 488. So there is a good chance that this stock is actually in this big CD leg higher, which actually started during the financial crisis GFC lows, and just been moving in this. Of course, you're gonna see some pullbacks. It might just come and test this trend line around here. but it looks like there's further to go for this stock. And of course, these are really long pattern formations, which will take several years to pan out. But this is what the sort of pattern we could be actually looking at, and it'll be just amazing to see when it gets completed what happens to this stock, just from a purely educational perspective. Okay, and now let's take a look at a stock, Citigroup. The weekly chart of Citigroup, you can see a pretty messy price action. There's really nothing to talk about this one. It's just been finding resistance from 61% retracement. It has not been able to make a new high around here. And if I just show you something by going on to the monthly charts, and here, and this is not even on a log scale, you can see that it had put in a big massive top and then a double top. So the first top came in 2000. That is the dot-com bubble, and then just before the throes of the great financial crisis, put in a double top. It wasn't able to make a new highs, and look what the price did. It just crashed like this. Like people talk about stock market crashes and stuff. Just look at some of these individual stocks which would just crash during the financial crisis. Now, one thing, I don't talk about crashes on the channel, but I think from an educational perspective, I'll do a video. We'll take a look at quite a few popular crashes that took place. The thing about the crash is it is happening every day. You just have to pick your time cycle, a time horizon. So if you pick your time frame they're happening, you pick your 1 minute chart, and you'll look at something like this on a daily basis. But of course, it's really important to actually put things into perspective. What we actually look at. So one of the things that these big massive moves, they actually to the downside, they usually come from a retracement level, not from all-time highs. Okay, so it has been like what 24 years now, and nearly 25 years now, so quarter of a century, and the stock is not nowhere even close to its all-time highs. So there we go. I mean, this is incredible stuff when you watch them on really long-term charts. And the other thing is that in this business, what is really important is excuse me, it was on a log chart. What is really important is to actually do your stock selection, and sometimes it's just better to be in an ETF such as XLF, because the XLF has been performing much better. Okay, now there is another stock which is actually something like this, which I'll show you. It's Deutsche Bank. Let me try to get the ticker symbol for the Zetra. So this is the Deutsche Bank, and if you look at this one, this stock also peaked in the great financial crisis, and quite a lot of horrible news that came out. And look at the price action here, and just Deutsche has not been able to recover. Now the Citigroup chart is much better looking than this one. At one point, there were rumors that this is actually going under, but the German government came out and they stabilized things because it got the name on it. So it's also completed, or really near to completing its ABCD. Right here where there is structural resistance here. So this is a really big bank, but the share price is just reflecting something different. So there we go. I don't know what it is, but if the performance of the bank was that great, then perhaps the stock price should have been much higher, but it's just not. So that's a fact. Now let's take a look at the Bank of America. This is the monthly chart for Bank of America. It's found resistance close to 78.6% retracement. Could it be in this big ABCD lower? Now that will depend upon several support points here. I think the biggest one will be that whether it breaks below the lows of 1st of August 2024, that's actually 5th of August lows, then we could have an ABCD which could be a little bit lower. Let's view that here on the weekly chart. So here, it's one of our favorite banking stocks. Some really big cycles for it, but we are also watching the patterns, and then it's clearly finding resistance after reaching our shorter term target around 40, 50. And it could do this ABCD lower here, breaking below 31.24. I think that it goes and tests these lows around 25, and then we might be having an ABCD, which could actually take it much lower, test the COVID low. So that possibility is there. But right now, we could look at perhaps ABCD around here, and this level around 31. 31 is pretty important and pretty good support level for Bank of America. Now let's take a look at Wells Fargo. This is the weekly chart for Wells Fargo. To me, it does appear that we have got some more downside to it. It tried to actually take out the lows of 5th of August, but just going back into the range. Chances are we are in this ABCD lower to around 47, maybe a little bit lower. But you can see, I think it's got this head and shoulder pattern in play after filling in this gap around here, coming back all the way from February 2018. This is what Wells Fargo is doing, and let's take a look at Morgan Stanley. So the Morgan Stanley one is a really big range-bound stock. It's just moving in this pretty big range. I think it's more easily seen on a monthly chart. Here we go. So you can see that here. These are the lows here. So it tested these lows. Now it's testing these highs. So it's just a range bound, by the bottom of the range, sell the top of the range, and it had done something like this previously as well back in 2018, and then this is where the stimulus came in, and then it just jumped off. So this stock is also really interesting. All of these banking stocks are interesting, because what it shows is that this Morgan Stanley, it put in a top just September 2000. That's when during the financial crisis, and then it took it about 22 years to make a new all-time high. But then for the month it just closed lower, so it wasn't even a pretty candle formation here. So could we be looking at a double top formation here? Perhaps we could be, but it remains range bound here. And this is the interesting thing, the Citigroup we had a look at, and the Morgan Stanley we had a look at. Let's see if it is doing its a big ABCD. I think actually this is not the right way to do it, because this is just going to be the smaller scale. It's very close to it, because A, B, C, D. Let's see if we have got an expansion of it, like 1.272 expansion here. Slightly above, we have got the 1.272 expansion. So yeah, we'll just keep an eye, like 110, which is reached around here, and 116. It's only about $6 difference, but it could be pretty. We have seen this come in about 2 years ago, a little over 2 years now. It could be a pretty good double top formation here, and we have just seen it go in a big trading range. So this is what we are watching in the financial stocks. So we covered the ETFs for the regional banks, the XLF for the financials. We took a look at the individual banking stocks and some fintech stuff, for example, the Visa and MasterCard. So as always, if you like our technical analysis, you found it of educational value, give the video a thumbs up. And if you want to be a subscriber, then please do subscribe to the channel. And if you do, then hit that bell icon button That way you will know when the new videos are posted, so you will not miss anything. Thank you very much. Have a great weekend, and I will speak to you soon. And there are more videos coming out this weekend. Have a fantastic weekend.